Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys, it is September, and this week it kind of ends up being a bit of a transition period. You will start to see more liquidity come into the markets and a little bit different market behavior, but it won't become more pronounced until after the non-farms this Friday. But you are starting to see it already here. Coming in this morning. Oh, how come it's not showing? Oh, I clicked the wrong scene, the one without the camera. You can see here we've got like 5,000 contracts up on here right from the get-go. So it is post Labor Day where the volume and so forth comes back. So let's come to the charts and kind of see what we got going on here. So here on the Treasuries, we took a little bit of a move lower late on Friday. That was actually like after hour trading, and I'm not 100% sure what drove it, but there was a pretty good sell there. So that brings us, but they got out of this lower range and now they are kind of testing like, let's say the 12-ish area. There's still going to be this other low down here. 0.3 is another benchmark we can look at, but you know, they're kind of testing downside, and I think that would be appropriate, because even though I think overall, like, we're going to be reducing interest rates and things like that, I think that the market is a little slightly ahead of itself. So remember that this big move up here was kind of off of risk headlines and stuff, right? Okay. S&P 500 was unable to break through that hard ceiling there, so they are still within the range. Oil also, well, I mean, oil's been doing its own thing. It's down this morning. It looks like they're testing the lower end, but so far they are still within their range as well. Gold and silver, they seem to be trucking along okay here. There has been some points where you know, gold and silver kind of looked like not so good, but I'd say that they're holding these gains pretty well. I mean, if we go into that lower interest rate environment again, that could be good for gold. Okay, so Copper taking the hit this morning, though. Ouch, that's probably the biggest one to note here this morning. You know, we always tend to neglect copper, but this is one that I watch that I find can be incredibly important to watch. It can hint you to things that other instruments aren't. So I think that's significant. And here we've got the Japanese yen. After having a few days of downtrend, they are on the up again this morning, and the dollar is right below 102 to 101.77. Oh yes, and Bitcoin, we can't forget Bitcoin. Bitcoin's still struggling to hold 60,000. Still struggling to hold 60,000. So that's where we're at. Come back over here and check our docket and so forth. Oh, I have financial juice closed. Yeah, that's no good. Let's make sure that's up here. Well, so we don't really have any bottom of the hour news, but we do have a PMI and the ISM manufacturing PMI. That's a pretty important number. 3 and 6 month bills, 52-week bills. Okay, so let's come and write a few things. Dang. Summer and transition period. high liquidity. Lots of bill auctions today. ISM PMIs, very important. And let's just say close to breakout zones. That's not something that I think is necessarily going to directly drive flows, but if they get a little push, then it could. So let's just make a note of that. The momentum is down. Let's not call it the momentum. Let's say the trend so far has been down, but I don't know if this stuff, these two things are kind of neutral, but tell us something about the future order. It's just not a directional like the market order. Bill auctions today, maybe a little bit of a buy. ISM PMIs, well, let's see here. What are they looking for on the ISM PMIs? Manufacturing prices paid, they're looking for 52 versus 52.9. And the headline PMI, they're looking for 47.5 versus 46.8. Okay, so I think that those are fairly in line with what I would anticipate them to be. I don't know. 48.1 is maybe a little light. I think that the manufacturing PMI might be a little bit better than 48.1, but it's manufacturing. Manufacturing kind of has this tendency to like just really, really miss as of late. So can't be too confident on that one. But that doesn't really give me any trade here, at least not for the beginning time. All right, so we are kind of in an area where I think that you can potentially take hits and pretty good chance that you'll just make $10 on the micros either way. But I still need to know which way it's going to go. Okay, now the next thing is that because it is September, we need to roll over our micros. So let's do that. So September is V, right? Oh, well, I can just do that. Oh, it's U. U. Hi. U. 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 There we go. It took it a second, but it's coming down, coming back to it. Has pretty good liquidity on the micros as well. Well, at least in the 10-year. It kind of looks like the 30-year is still neglected. All right, so that's where we're at today. And good morning, Uzi, Octavius, Namrus. Well, let's start by hopping around a little bit, checking the headlines. What are people talking about today? German elites call for firewall to prevent conservative governance after AfD election win. So something that's been going on over there, and this is like one of the things that I hate about multi-party systems, is that you have this conservative political party that won. They straight up won. But because they don't have a majority, they still have to combine with other parties to create a government, and none of the other parties will join with it. So I don't know if they get anything from it, but there's like another election coming up, and they could just extend on those wins. And the liberals in Germany are just absolutely apocalyptic about it, because the right hasn't won in Germany like basically since World War II. So that's happening. I don't think that that's anything that affects us, but just some color about world politics that we should know. Goldman, a premium article, but I'll just read you the headline. Goldman going for gold. GS says highest conviction trade for a near-term upside is gold. Well, the trend in gold definitely looks good. I do feel like the issue with gold has been that you get gold to hedge yourself against inflation. So when inflation is raging, you would expect gold to be like buying things up like crazy. But that's not what has happened. Gold has followed the interest rates more than anything. So if we are going to reduce interest rates, probably a good thing for gold. Probably a good thing for gold. And then on top of that, you do have like central banks around the world buying gold. And demand from China and India, probably not super great right now, but probably about as low as it can get. So that's probably going to go up in the future. So that's also going to be positive future flow for gold. I also should note that we've seen a lot of interesting volatility in gold over the past few weeks. Well, the Treasuries, they decided to test the upside here, but they've really started to shy away when they got up to 18. Like, they've held it bid offer at 17.5, 18, and you are seeing some volume come through there. About 2,400 buy and 1,300 sell in that area. But it's just kind of been a trickle. So nobody really seems aggressive like they want to bust this or anything like that. Let's see if they can get through though. Okay, so there's a good uptick and a bid. Ooh, and a follow-up too. So that was a pretty good breakout. So something interesting about that uptick was that they had 3,000 contracts there almost immediately. So that's something that we need to pay attention to. Not necessarily like, okay, that's a really good sign that they are going to continue to tick up. In that instance, they did it, right? But 3,000 may be the new 2,000. Normally, it's like, if we tick up and 2,000 stack, that's okay. That's pretty good. Now it seems like it's 3,000. There's more liquidity in the market. More liquidity in the ZN. Because it's after Labor Day. So they traded through that 18.5 on about 2,000 contracts. They were able to take 19 bid at 2,000 contracts as well, but it has kind of backticked a little bit. So now we've got a bit more volume there, 19. I'm not seeing anything in the spread, but I am definitely seeing a pretty good consistent buying flow coming through here in the 10-year. Now, if we were to have taken a trade down here when it was at the bottom, that would have been a great trade. I don't know if this is a great trade right now because, like, as soon as it becomes clear that you're getting that kind of a flow coming through, that's often like right where it stops. On the other hand, wouldn't surprise me to see, well, 20 is kind of like the higher end of this range. So that makes it difficult. Then you're starting to get into the single prints from Friday up to 22. Up to 22. So that's an area that might be easier for them to get through, but then at 22, I would probably expect there to be a little bit more liquidity from there. So that doesn't make this 20 the greatest entry. We might be able to get a few more ticks out of it, but I don't think that I want to risk this one on it. I could take a sim trade. Like if we get good reloading there at 20, which we are. Okay. Try a second one. $3,455. So that's pretty good reloading. So what will happen is you've got a large buyer. They're going to have like these big icebergs that they're going to kind of trail up so that if it does come down into them, you know, they can get good fills there. So that very often ends up being something that says, there's still buyers there, and then they continue to push up. But that can also be something that can exhaust the buyers. Basically, like, there's enough people selling there that the big guy gets filled and he's done. And so when he's done, he's just going to, you know, it's just kind of going to sputter out and price comes back a little bit. So that's why, like, the reload, it's a good sign, but it's not something that I would take the trade on all by itself. Okay. So I decided to use it with 2 contracts and just take a really quick 1 ticker there. Actually, with the way that happened, I wouldn't mind still having that. In other words, they seem to be able to be moving through 20 half. The offers aren't really standing in the way there. On this one for my second contract, I think that if I get 22 half, I definitely want to take it. Put an order there. I do see the flows perhaps moderating and flipping in the 5-year a little bit. I still haven't gotten like a super clear sign of like a liquidity hole sort of a thing. Thinking it could happen at 22 half. Okay, so they are able to take 22. Maybe. Okay, so on this one, you should know that those offers, even though the bid stepped up, like now there's almost 4,000. Well, okay, they shied away from it. They almost had 4,000 contracts there. Only 253 bought at 22 half. And those offers at 22 half, okay, now they're pulling. Now they're pulling a little bit. So already I'm making a pretty okay guess there at 22 half. Still, the thing that I want to see is like the low latent liquidity, like a lot of volume trade there and then low latent liquidity. So they just took it out. Still kind of doing a stop run. Okay, 1,200. Now that they traded back down 1,200. It does look like, even though I made 4 ticks off that in ZN, I don't think that it's only just now being worth it over here in the micros. So I guess I could have taken it live. By the way, not hearing anything from my news squawk. Not really seeing... Okay, well, there is... Mester is speaking on CNBC. How come I'm not hearing that from Financial Juice? Maybe double check, make sure that the sound is working over there. Will be a discussion on 25 or 50 basis points. So Mester saying there will be a discussion on whether it's 25 or 50 basis points. Sounds like something to me that, first of all, would be very objectively a buy in the Treasuries, but also kind of a little bit of the market overreacting or reading too much into the comment. Because, yeah, if they say, so do you think that, like, if you are doing an interview and you ask Mester, will the next interest rate cut be 25 or 50 basis points? And she would say, well, of course, we're going to have a discussion about that, whether it will be 25 or 50 basis points. That doesn't really tell you about what the chances are that you get a 50 basis point cut. I still kind of think that a 50 basis point cut would be unnecessary at this point. It seemed like it was a real possibility back when the equity markets were like cratering and everything. And at the moment, with the most recent data that we've gotten, I don't think it's very likely. Okay, Joseph Wang says, there is no cash on the sidelines as money fund assets typically don't decline from rate cuts, but rate cuts do attract more flows into bond funds. That puts downward pressure on rates and may lead to some rebalancing. Okay, so should I read that as that if we start to see rates decline here, that it could be a slightly more dramatic swing than we would expect, because you've kind of got this cash that's sitting over here and it kind of sloshes over, pushes it too far. In other words, like, when we're looking at this, for instance, is probably a good example. We're seeing rates drop here, right, off of Mester's comments. And we might say, well, that's too much. They're not going to do 50 basis point cut. So I think that's too much. But you could see money getting involved anyways. And you know, that money really flooding things and pushing the treasuries much, much farther than we would expect. So also means when we see these charts that are like, how much money is on the sidelines, we might need to have a little bit of skepticism. You know, there's something really weird about this move that I didn't really notice before, was that there was a huge drop. My pen is not working. I need to restart the pen, apparently. They're stepping up at 23 now. But you see that huge drop in the 5-year and cumulative delta? What's that about? And we're starting to see the yield curve move as well. We're starting to see flattening. So they're buying it very aggressively in the 30-year. And there was, it's not been buying as aggressively in the 5-year, and there was a big sell first. So that's interesting. So was it like somebody came in and, you know, they're going to execute a yield trade, so the first thing they did was they sold the 5 years super aggressively? and the market makers just swallowed it all, so then they pushed it up. So that would maybe be one sign, if that's correct. That I think that my reaction to that would be that this order flow that we're seeing is likely to be persistent. So we did build a little bit of volume at 22.5, right? I was actually pretty spot on about that area, but they have continued through it since. The buy is still there. Particularly, it's not so much in the 10-year. It's really coming through in the 30-year. It's really coming through. In fact, we need to recenter there. Wow, FBI arrests Linda Sun, a former deputy chief of staff to New York Governor Kathy Hochul. I don't know how you say her name. The Wall Street Journal says Chinese government-backed trolls are more aggressively targeting U.S. voters ahead of the 2024 presidential election. Scott Adams replies, I just realized the professional trolls who are generally the first to comment on my posts all went away in the past week. What do you think about that? I do kind of feel like that the internet has been a little bit different the past week. I've had these discussions with people on Reddit where I really do feel like I'm talking to a real person, and I get kind of interesting, unexpected reactions from them. They'll be like, how is this not, Donald Trump basically tried to foment an insurrection. How is that not disqualifying? And then I'm like, well, but he did not incite an insurrection. That does not, what happened does not fit the legal definitions of those words. And they were like, well, but he was indicted on it. No, he wasn't indicted on that. He was indicted on this novel legal theory that creating an alternate slate of electors is fraudulent, and that they can prosecute that under a RICO statute. That's what's going on there. And then they will stop replying. They're like, oh, he's right. Was not actually that case is not actually what I think it is. You took a short at 23. Wow. Did you not participate on? Let's not say it that way. Did you participate on the uptrend at all? It does sure look like it's moderating. I mean, the 30-year came back there pretty good. So the 30-year coming back 4 ticks. That alone is by far the biggest pullback that we've had through this whole trend. It is, by the way, coming back into the area where we kind of thought that there was a bit of a liquidity hole as well. So it may well be that, yes, the buy meta order is gone. Oh, never mind. Holy crap, that was 6,000 contracts just came out there buying. Well, that is very interesting. I think I might only get a tick or two from it, but that kind of almost makes me want to get in again. Amir, good morning. Octavius is a short as well. See, when I first took a short at 23, I thought it was Octavius, to be honest with you. I was like, well, that's kind of the spot where he does it, isn't it? Is I see kind of the volume build out in an area, and they pull back a little bit, and then I find that he's already in it. That move was expensive. Well, I hope that didn't stop you out, because it came right back, didn't it? but that's I don't know. I'm a little bit mixed because you know they got. Oh, did you see that huge 17K at 24 half there for a second? Hey, wait. I should have heard a tick click at that point. How come I'm not hearing click click? Minimum size 500. Surely there are meta orders going off bigger than that. Well, the easy way to test this is to just get rid of the min size and make it a 0. Okay, something's wrong with my depth tape. You know what? I think I am just going to recreate it. Because... okay, so when I recreate it, I'm immediately getting stuff. Oh, maybe it's because of these position things? Maybe it's because I set a min position. Min size. Let's set that to 100 for a second. That seems to be working. That seems to be working. Okay, cool. But what I really want is more like 5. And I think I had changed that positioning thing like a long time ago, so that's been screwed up for a while. But there was a really big order kind of warning out there for like at 24 half. So that's a little curious. So something else that I think we should see today outside of the markets here is that this is going to be a time period where politicals are going to, you know, really try and come out the gate. You know, set themselves apart for the political season ahead, which is fall election season. I'm seeing a little bit of chatting online and stuff, but nothing too big. And I can already tell on the smell after the end of this session. I'm already... I don't feel like consciously too stressed out by that, but I think that move is getting the chemicals going, man. Eric Daugherty. Democrats are going to have some serious issues if this pans out. With the 2030 census, GOP states have the potential to pick up several electoral votes. Man, we're really talking about a census 6 years from now? Okay, well, this would mean the GOP would not need Pennsylvania, Michigan, Wisconsin to win the presidency. Okay, so I can kind of see that for starters. You know what? I actually think that would be a bad thing for the country. You know, like having to appeal to those Rust Belt states has really changed American politics, and I think it's kind of pushed them towards the better. Like it's pushed them to, man, that is still pushing super hard. That's pushed them towards, you know, a group of people that have really been neglected. But you know, what happens. Now, those three, because they get Georgia, North Carolina, and Arizona would equal 275. Now, those aren't automatically going Republican, but they have a systemic advantage in favor of the GOP compared to the Rust Belt. By 2030, we may also be looking at an overall changed set of swing states, but overall, Democrats are slated to lose several electoral votes in New York, California, Illinois, Minnesota, Oregon, to places like Texas, Florida, Tennessee, Utah, and Idaho. It adds up. Yeah. Utah is going to get another electoral vote, probably. This is influenced by population shifts of Democrat lockdown policies, and Democratic policies in general really have the potential to screw them over in the Electoral College. Wow. Is it going to fall? I don't know, man. It does look like a competing flow is coming in, but it's not. They're still holding it. So this is one of those situations where I really try to avoid trying to make a strong call. Like if I'm long, then I can probably stay long. But you notice that I haven't been trying to take the follow-up trades here since the 22.5 where I got out. Because there's been a couple of things in here that did kind of make me go like, wow, this is super aggressive. I think I want to be a buy-in on this. But that said, it's been a little bit messy in this area. And so what I see is I see really strong flows. That's the main takeaway I think we should get from that is that we see very strong flows. And strong flows that are persisting beyond the point at which we would normally expect them to take a break. They're just pushing and pushing and pushing and pushing. So that makes it really dangerous to try and like really take an outright gamble on what it's going to do, right? If I can position myself in a way in such that I'm in line with the trend and I have some safety, I have some risk to kind of play with it. So like say I had started playing at 23, or even if I was playing in this 24 to 25 zone, but I was taking partial contracts, and so now my risk is below that 23 half where that 42,000 contracts traded at, right? Then I'm in a spot where I can hold it and see if it continues to go up. And in a move like the holy shit. Oh my gosh. Oh, what? I have never seen anything like that. That was insane. Holy shit. That was like almost 20,000 contracts net came through, bought a huge 7K bid stacked at 26. It just slipped 4 ticks. That's insane. You guys want this rally to stop, right? Well, that Uzi's like, I can make it reverse for you. No, dude, that's okay. So first of all, when I see something like that, now I definitely don't want to get involved. Like if I was still long, I would probably be taking it off at 26.5. I would be saying like right now, well, wow, that is a really strong order flow that is super likely to continue, but I don't want to mess with flows that big. I would be like, okay, cool, I won. That's because man, it does not get much more spectacular than that. That was just an absolutely wild and insane stop run. Like look at how many contracts traded there. Like there was icebergs in the way. There was like a 6K and a 7K iceberg there and everything, and they still blew through all of it all at once. By the way, this is also, we're also well past some of those levels that we were talking about in the treasuries. So let's come over here and zoom in a little bit on the treasuries to show you what I mean. So we were kind of looking at this 22.5 was kind of one spot where I said they're likely to, they can slip through that, and then I kind of want to see what they do. But now we're well into this range from Thursday, and the higher end of that is 30.5. So there's frankly, if this is like a real trend day sort of a move sort of a thing, they've still got room on the upside to go. They're still reaching at 27, in fact. Like, wow, what a move. What a move. That is, I'm gonna have to go back and save that one, because that was absolutely nuts. I've never seen anything like that. That really, I really think that was like the single largest volume pop I've ever seen in my whole 7 years of trading, or however long it's been. Really was crazy. I think after a move like that, you really do have a good chance that there's going to be some follow-up. Like people are going to want to jump on and get involved. I don't know how. I don't like playing with it when I see big orders like that. This does make me think, though. Was it the things that Mester said earlier? Ooh, Jigsaw's got something, has a article out about new version of Day Trader. I don't know. Don't you kind of think that seeing an order flow coming through that strong kind of makes trades like a hero reversal kind of not applicable? I don't think that is a trend that I want to stand in front of. Like there is no way, it'll probably be really ironic, because we'll probably like start to see the counter flow come in and this will completely reverse. But there is no way that I personally could take any kind of a short trade at this point. This is the trade where like I will try and jump on board it and it won't go down, but I'll just get sliced and diced, right? That. Now, I don't see anything on Twitter. I don't see any headlines on Twitter, but there was earlier, recall, there was Fed's Mester was speaking, and she was saying something about, well, will it be a 25 or a 50 basis point cut? And I think that we are unlikely to get a 50 basis point cut. But if we did get a 50 basis point cut, I would say that the markets probably aren't correctly priced for it. So that move could be because of her comments. Strangely enough, though, I'm not really seeing a whole lot of activity on social media about that. Right? Like, Treasuries raise declines, yields fall to session low. Now, another option could be that there has been something has happened, like perhaps the conflict in Israel has expanded in some way, and we just haven't gotten the headline yet. That's also a strong possibility. I have a hard time seeing a flow that strong being purely endogenous, especially at the beginning of the week and all of that sort of stuff. Like that's really like that's got to be, well, it doesn't have to be a headline. It could also be something like, you know, one of these passive flows that come through because of like month and all that sort of stuff, right? Oh, yeah, actually, you know what? That was one that we should have listed on. Beginning of month tends to be a buy. So it's possible this would still be like the strongest trend I've ever seen come off of that. I mean, I'm not going to say that this is the strongest trend I've ever seen, because I've definitely seen trends that just like continued to push and it was really insane. And this is just getting started. So I don't think I can put it on that here yet. But that volume event at 26 was possibly the strongest, craziest pop of volume I've ever seen. It's funny because the whole move up started off of a divergence in delta and price. I'm not seeing that. What do you mean by that? So if I come to my chart and I look at the 10-year, I can see that the bottom there is when you started to see some sort of a meta order come into the 10-year treasury. And remember that I was saying, well, here there is some sort of an imbalance right here, but how far is it going to go? Who knows? How far is it going to go? Who knows? And as soon as you notice it, that's often where it starts to moderate. So I got out and it did. It started to moderate, but then you got this thing. Holy crap. Look at the two lows in price and then match them to their respective. Oh, are you talking about, okay. So you're talking about this versus this. Yeah, but you know what? I completely ignored that because this right here was the open, right? Oops, sorry. I right here where my cursor is, that's the open. Like the open was basically the low. So I kind of ignore somewhat the moves that we get in delta that happen just before the open. Now, did we see similar in like the 30-year? not so much. But, you know, because 30-year seems to be the driver, the main driver. 5-year. This is still the thing that, like, weirds me out. Or sticks out to me the most.
Block buy.
Is that there was, oh my gosh. Oh my gosh.
Block sell.
Did it again. There's gotta be something out there, guys. There's gotta be something out there, man. Let's reset. So I'm going to make a super speculative guess here. Okay, this is a guess. You buy the treasuries, you sell the equities. Turn around and you sell the equities. We haven't started yet. This is kind of the period where you start to see those equity traders get involved and start to position themselves. And the trend is down in ES. So let's see what they do. Is it like a flight to safety risk sort of a trade where they buy the treasuries first and then they turn around and they sell the equities? I don't know, man. I have a hard time seeing that being just, it's the beginning of the month or whatever. Dollar is just racing down. It's kind of interesting. I guess I didn't really realize where we were at. 384. That's not bad. Like, also, it's 6 basis points. Okay, well, Now, with all of that said, they didn't quite touch 114 even, and I am starting to get counterflows now. A much stronger counterflow as well. So it's going to be really, really hard to judge because so much volume has come through. There's already a 10K there at 31. Like, we're going to see really big numbers, and it's going to be hard for us to judge what's really going on, if the flow is turning or what. But something absolutely crazy is going on. It's well beyond the point where, you know, I don't want to be involved in this. There's like, it's too quiet, you don't want to be involved. And then when it's moderately busy to pretty busy, those are great. But then when you get the absolutely insane moves, those tend to kill you. So I can't touch this now. Someone 10K on the bid. Yeah. I have to say, like, this is the thing, is like, we're definitely building out another spot here. But again, there's a huge flow that can probably do anything that it wants. Probably do anything that it wants. Who takes 10K on the bid near the high? I mean, yeah, our stupid butts with R1 contracts. Yeah. But that comes back to that thing that I was saying that's like, okay, when you see reloading, that tends to be a good thing. But if that ends up billing the buyer and the buyer is done, then that's the end of it, right? But we have absolutely no clue why this is coming through. It really could just be like a sovereign wealth fund and a couple of other guys are involved here for like completely passive reasons that they have to buy.
Buy.
You know? Wow, 8K. 8K. It's Warren Buffett buying the treasuries, maybe. Oh man. I mean, I still am kind of thinking this looks like a flow based on a news headline that we maybe just kind of overlooked, right? So again, Mester was on TV, right? I don't think I heard anything on my news squawk, but I did see a tweet there that Mester was on television. Yep, 11K now. So here's something that I think is really hard about this, is that on one hand, we are seeing some massive events. So like in particular, that 20K, it literally was 20K instantly puked out. That was wild. I don't know if I've ever seen one that big. But when we get into these kinds of market conditions, which is to say, like post summer trading, liquidity looks pretty good, etc., etc., etc. It used to be pretty typical to see 10K like once a day or every other day, or, you know, it was a weekly occurrence at the very least. These days, or especially over the summer, and post-COVID, but then especially over this summer, it's been like 10K is a lot, and you don't see that very often. But under the conditions that we're in now, discounting the trend, 10K isn't crazy to me. But seeing so many 10Ks, because they've just been popping out 10K icebergs all over the place, that's certainly unusual. I don't know what you do with it, though, man. Like, this is just... It's just absolutely wild. Look at oil. Oil is looking pretty okay. It's interesting. You know, when I look at it, it's like, oh, it's a downtrend. That's a pretty decent downtrend. That's not such a big deal. And then I looked at it and I'm like 71, 73. Holy shit. Is a bank going under right now? I'm now seeing oil down is all of the sudden giving me the flashbacks. Like, this now is reminding me of how long has it been? I think it's been over a year now when we had the regional banking crisis, essentially, right? It really has a similar smell, because I remember when that happened that there was some insane action going on in the Treasuries, and there was no headline. We had no clue what was going on. And by the time the headline came out, then it was like all of the biggest moves were already over. Rumor has it that Bank of America may go under. Buffett dumped his Bank of America stock. That's true. Two main factors weighing on oil at the moment is China demand weakening alongside OPEC planning to increase output in October. Well, with as much as prices kind of declined, though, don't you think that kind of suggests that they don't need to increase output? So I'm kind of wondering about if that OPEC is going to change their plans on that one, because a lot has happened since they've said that, right? I got super excited there for a second. So the news squawk came over and they started out with the Bank of America. So I thought, oh, maybe it is something, but it was just their research arm releasing a report on China growth. So I don't think that there was that. Well, let's not get too excited, right? It's still just a theory. The way that all played out gives me strong reason to suspect that some sort of massive risk event is going on. And something that, like, the banks know about and the rest of the market doesn't yet. I got a strategy, but I know how to backtest it due to, yeah, you're not going to have the data to do it. 0 day to expiration long straddles on the last. Long straddles? Why long straddles? And large institutions are rebalancing for options expiration? Wouldn't I would have thought that you would sell the straddles. Basically on betting that well, what you could do, I think that the first thing that you could do to try and test this is to ask on that day. So you're saying on the last day of SPX for the month, does VIX tend to be up or down? But I would think that it would be down. Brad says World War III. The world ain't into big conflicts like that anymore. Just dragged our trillion-dollar scuffles into the middle of nowhere that grind up a generation or two. It's all about proxy wars. Proxy wars and foreign intelligence operations. Okay, so we're getting the open and some news here, right? I guess the wild thing here is that we still have PMIs in 15 minutes and 30 minutes, which would, are pretty important data points for the market. I suppose that one possibility could be that this order flow was front running some expected crash in the manufacturing PMI. That's a possibility. Okay, well, Rasmussen, granted, I know that some people might have some think that Rasmussen is not a very neutral outlet, but they have a daily tracking poll that is pretty useful. And what are they showing here this morning? It seems to show that both Trump and Harris support are rising, and that Harris has maybe perhaps passed Trump again. This contradicting this bit spot right here where Trump was starting to pull ahead again. That's come back really quick. What's the cost basis? 26.5 buyer's cost basis. So there was really, really strong buying through all of that and really strong volume overall, and ergo that buying cost basis has come up with everything else substantially. Obsidian says, wow, I didn't even look at ZN this morning. That's a big darn... Yeah. Well, I think in terms of the size of the move, it's like 6 basis points, right? Let's see here. We're at 8. Well, let's say 8.5. And earlier we were at 9. So 5 basis points is a pretty big move. It's not like unheard of. But 5 basis points and us not really being sure what headline might be driving it, very unusual. But what was big about it, again, was the volume that came through on it. We had some points where 20,000 contracts spit out all at once and pushed the treasuries up 4 ticks. Like it was back here at 26. That was absolutely insane. Was like there was a 7K iceberg and a 5K iceberg, and they just blew through all of them. And then a huge 7K bid came out at, I think, 26, was it? And by the end of it all, when I looked at cumulative delta, it was a change of 20,000 contracts. So it was literally 23,000 market orders just slamming into the market all at once. That is on par with probably the largest single volume event I've seen. Okay, so I'm just popping over here to Zero Hedge, and they don't have any pinned stories, but their top story is oil tumbles below $75, erasing all 2024 gains on hopes of Libya production restart. So if Libya production restarted, that would make sense. Is that
Block
really able to drive a $5 change in oil? And would that drive the treasuries to bid up as strongly as they have? I don't know. Oh, that's my probably my phone connecting to the van, or connecting to the, there we go. My phone connecting to, there we go. That means my wife is taking the kids to school in the car. Oh, I totally forgot about that, man. Dude, yesterday I spent Labor Day. I spent Labor Day basically
Block
doing
cell.
the most ADHD thing ever and trying to find car keys. And I think I searched for like 6 hours and didn't find it. Like, I wasn't like super hard dedicated, but kind of like on and off trying to find it. Couldn't find it. So she has to take the big kids at least in the car. But you know what? She should. It's a nice car. It's an Acura. I really like it. Why would you take the van? But for the little kids, when Asher starts preschool today, he's going to need the van. We need to find those keys, and I can't find them. Mr. Seth, you have something? Okay, so I actually do have access to Tick Strike. You know, I have a pretty good relationship with those financial juice guys because I've been on board since the very beginning. And so I've tested it out and everything, but it was not a tool that I personally found useful. So I don't really use it. I do kind of wonder, like, the oil thing, could that cause a move in treasuries? It could. I'm a little surprised if that's what it is, but it's possible. Master speaking, could that have caused a move in treasuries? Possible. I kind of feel like that people would be talking about it more if that's what it was. But it's possible. Could there be a bank going under? Also possible. But when those are kind of like your options, like definitely something wild is going on, right? I'm thinking this is likely just a front run for the PMIs. So now I'm curious to see how the market will trade them. Yeah, that, you know, that's a good, I don't know, man. So the thing that makes me skeptical about the front running theory is the amount of volume that came through. Like, I think that if you're an informed trader, right, you're going to look at that and you're going to say, okay, that's going to move the market up yay much. And you will calculate the optimal number of contracts so that you make the most money when that pop comes out, essentially. And so I don't think that you come in with like market orders, 20K market orders, right? 20K market orders is people getting in because they're afraid they're going to miss it, or somebody being forced out of something. You know? So, granted, all of those things that we're talking about are like things that are possibly happening right now that you are seeing, you know, that would cause buying in the treasuries, and maybe even multiple ones happening at the same time. So it's a possibility. Now, other interesting thing, Bitcoin is taking a big hit and gold is down. Despite the treasuries being up, gold is down on the day. Copper had a little bit of a bounce. It is now turning down as well. I don't know, man. And again, remember I said I think that you buy the treasuries and then you turn around and you sell the equities. And it hasn't been huge, but if we had taken that, because that was at like 715 that I was saying that. So let's say that it was about at 5630. So you're up about 15 points now at this point. Although if it's really on that theory, when you get that one, okay, it's like the treasuries bid up super strong in the morning, and then after the equities open, they turn around and they sell the equities really hard, sort of a thing. Those tend to be really monster moves. I would expect that to be more than just 15 points. So I don't think that one confirms the theory yet. And I'm not saying that I think it's going to go further, but I'm just kind of, you know, trying to give a overall impression of my experience, what I've seen with these sorts of things. One of the craziest trades I ever saw, and this was really early on, like I think it might have been before we started streaming, was a trade like that they bought the treasuries and then they turn around and they sold the equities hard. Yeah. You know, with the way that this disrupted the market too, I'm expecting those PMIs to be relatively major movers, right? We'll find out here in a minute how much of the liquidity pulls. A lot of big hidden liquidity today. Well, I would say, I think at least that most of the time that hidden liquidity is actually there. Of course, it was going to be less during the summer, but now after the summer, I think that like 6K at any one individual price, that those are going to be out there. And normally those will kind of pull and readjust as the market moves, but because it was 20K that came through like all at once, those guys kind of all got stuck, right? probably what happened there, was that the market makers all got stuck with a bunch of fills that they didn't really want, and so they had to puke them higher. Still doesn't explain what the initial trigger was. Okay, so here is the PMI, first PMI. We did see a little bit of liquidity pull, but not too much, and not much of a reaction. Number slightly weaker than expected. The US S&P manufacturing PMI 47.9 versus an expected 48.1. Remember though that ISM manufacturing PMI tends to be a stronger mover because it's more recent data. You know, I wonder if Zero Hedge is tweeting anything about this. When I go to Zero Hedge's Twitter account, I don't see anything there. Oh, maybe it's because they only follow private people can see that. Only subscribers can see that. I don't know. Well, they picked 23.21 into a new high. So, like, so far, like, is the flow over? Well, we're not getting that yet. There was another pretty big event there, like 10 minutes ago. Just continuing to throttle it. It's pretty wild. Yeah, I think I would have made, that initial trade. Because remember, the initial trade was like, well, that looks pretty strong. It's already gone through, though. So maybe we can get a few ticks with a full treasury. But, I think I might have been able to have made like $40 if I had taken it on micros. So I regret not doing it. I don't think that I would have held it through. I think that I probably would have taken it off before that big craziness happened at 26. And then even then, like I said, if after that big craziness at 26, I would have been pretty likely to have taken it off. Even though I know that there's a possibility that they continue up, when I start to see big volume like that, I know that's dangerous. It was probably a fat finger trade. I have to say, like, it's not normal. Like, it's very likely to be somebody like being forced into something, like somebody puking a position or something like that. Although the other big thing we should keep in mind was that there was a pretty big like trade in ZF that kind of didn't match everything else and is generally in line with how we've seen the spread change. It looks like the 2 and 10 didn't move too big, but the 30 and 5 flattened pretty considerably. So, may have been a spread trade involved. You know, and when you get spread trades involved, that's when you really see massive, massive volumes sometimes. Man, Bitcoin is still like falling precipitously. Is it that big? Okay, it's from 60K to 58,335 right now. Still, that looks like a really ugly downturn to me. Let me come out here and look at it on a higher time frame chart. Okay, on the higher time frame chart, it's not insane. Interesting. So, in Japan, and this was a headline that I missed, but apparently overnight, Governor Ueda said that they will continue to raise rates as necessary. Could that be a driver as well? Oh, I don't know. The Japanese yen is up and all, but the volume in ZN was so strong. It really makes me think that it was something. It was flow specific to the treasuries. Although I suppose you might have caught somebody short that's puking or taking profits or something like that, right? Eric Wallerstein says, we cannot survive a 2.1% real federal funds rate. It is too restrictive and the economy will crash. We are uninformed traders today, for sure. For sure. I mean, I think that's kind of the... well... it's kind of this interesting thing because some of the largest trades are going to be the ones where you're uninformed, right? And I think that there's kind of this thing where, like, if you are informed enough to know, generally speaking, what the flows are supposed to be like, you're going to be able to spot that aberration a lot better. So, like on this one, I definitely had the chance to jump on board. I'm still probably a little bit too risk adverse for it. But you know what? I got a little bit of it. That should give me a little bit of confidence. But I don't know. It won't. If we get to the end of the day and we're still not sure what drove things, then I'm gonna really start to like be unhappy, right? Here's the market year 42 minutes ago. Remember the carry trade? The gap between the Japanese yen and the S&P 500 is huge. Not part of the narrative at the moment, which surprises us, but more often than not do risks like these come back into focus. The carry trade dilemma has not gone away. How much further did they get there? Looks like they made another 1, 2, 3, 4 ticks, but they're almost completely retracing it already. Kind of makes me nervous for like, are we about to have a recession sort of a thing, you know? Keep an eye on USD yen and the US Treasuries. Some major movement this morning. I'm short ES. Some traders in my group are short ES long. That's Pax Trader. I mean, so far. So last time we checked on the short, we were up 15 points. Now it looks like we'd be up 25 points on the short in ES. So my instinct's correct there. I'm not going to take a trade in ES, but 30 points is nothing to scoff at. That's a good trade in ES. And we haven't had the news, though. That last little move down, though, had some pretty significant volume on it, so... From what I'm seeing, though, it kind of suggests to me that other groups are just as surprised as us. Okay, here we go. And seconds. The liquidity is completely pulling. Oh my. Oh my, that was a jump. That does not make sense, actually. Okay, so headline number 47 spot 2 versus an expected 47 spot 5. So it was weaker than anticipated. But ISM manufacturing prices paid was higher than anticipated at 54 versus a 52. So I think that move there was really just volatility, that because we had moved up so fast today that, you know, and the liquidity had pulled so much that it was doing that. And not necessarily because the numbers were like super off or anything like that. I do see U.S. construction spending month over month negative spot 3 versus a spot 1. I mean, that kind of looks a little bit mixed to me. Slightly weak, but inflation's still a problem. That you know, that kind of all washes out. So I think that probably puts the nail in the coffin of the front running thesis, right? The move that we're having this morning, probably not front running. Okay, so discussion here. We're getting huge trend in ZN. What's the cause? Unknown risk headline. It could also be Japanese yen strong today. Could just be that. Fed speaker was involved. Hold on a second. My goodness. The mouthpiece got stuck into my daughter's trumpet, I think it is. And I couldn't pull it out either. I was like using my feet and everything. I couldn't get it out. That was crazy. Bank of Canada making a rate cut tomorrow? Maybe. Let's see here. What was the other thing? Oil cratering. Okay. So when I say unknown risk headline, I should say geopolitical risk headline. Bank going under. So we've kind of got like 5 theories of speculative flows that we think might be out there. We don't have any kind of confirmation on any of these. Oh, well, but then let's come in here and let's say front running PMIs. Then say no, PMIs were not that out of line. Now, with all of that said, we had like a huge jump, came back, they started testing the other side of 114 even. They have climbed back up into the 04. So looks like we're kind of skating around now. So this is now an extremely dangerous market to be involved in. S&P 500 appears to have not liked that trade and is now or the numbers, let's say, and is now below 5,600. White House takes aim at internet security. You know, if it wasn't for that whole CrowdStrike thing. Actually, you know, now's a good time to go and take a look at CrowdStrike. We haven't looked at that in a week or two. CrowdStrike. Well, they're up off of the lows. Good 30, 40% retracement, in fact, since that bottom. Although I don't know how you would guess when it was the bottom. I suppose that if you really wanted to get into it, you could buy it here. But like from a technical perspective, it might be an okay place to buy it. But then like they might be on the hook still for a lot. So I don't know how I feel about CrowdStrike's future potential. But they are going to be like one of your best plays for internet security. So I don't know, kind of unfortunate. They'd probably be at new all-time highs right now if not for that incident. Forex Live points out there's an ugly turn in manufacturing new orders in the survey. Let's see here. U.S. ISM Manufacturing New Orders Index, previous reading 47.4, new reading 44.6. So that is a pretty good drop, yes. What was that? Looks like there was a bit of a, because I saw some orders go off at 25, but then like they immediately bid it back up. This is, I have to say, a little bit unnerving to me because like all of the sudden the market is trading like it thinks that there's going to be a recession again. Doesn't it kind of feel like that? I'm starting to get irrationally nervous about a 2008 style recession. It is a pretty big order there at 03.5. Let's see here. What are you saying, Apol? I am still 100% on the recession is real side. So my news squawk is telling me that after that data release, that European yields are falling now. You know, new orders is one of those numbers that we don't look at as much in the surveys. I think partly because it's a very speculative number. They don't do an estimate on it, but it is a drop, and that is probably like the most forward-looking thing that we have. Kind of suggests softness. You know, that doesn't justify the amount of upside that we've seen today to like front run it, but good grief. And I would say that after this news, it looks like that the buy meta order is just kind of continued to come through. So that could be another thing, is it may have absolutely nothing to do with the ISM, and we don't know what the driver is, but whatever it is, they're still out there buying. Okay, well, the sellers just made 2 ticks right away there. It's still kind of skating on ice. I don't know why, but for some reason I have to use the bathroom early. So I'm going to do that. I'll be right back. Okay. I don't know what my deal is. That's usually usually don't have to use the bathroom for about another 90 minutes. Maybe I'm just super nervous today though. I don't know. Or maybe not even so much nervous as much as just stimulated. I mean, I haven't really taken a live position through this, so kind of wonder, like, I can recall many times seeing like really big monster moves around holidays, but my recollection was that it was usually before the holiday, not after. Even then, I don't think I've ever seen one where 20k orders come out all at once. That was really wild. Okay. Well, this looks like a little bit of fight here at 25 at 02 half 03. He ticks up. S&P 500 goes for another dip. Japanese yen still on the up. They've followed the Treasury with this move almost every step of the way, so I don't know when that comment overnight was made, though. Come over here. Must have made his comments. This must have been comments and everything. Big move. Treasuries didn't follow that move. Go back, big move. The Treasuries followed that move. But again, the volume has very much been very active in the Treasuries. So. Yep, there's an email about Day Trader 5 as well. I was just thinking about my my headphone order, and I'm looking at like the tracking that I got on it. It got sent out. It was received, en route, or awaiting processing. Label created. Currently awaiting shipping and tracking. Will be updated when received. 8 minutes en route. Was it never received? Because like I'm not getting any. And that was last Friday. What point do I contact them and be like, I'll wait until Friday. So I don't get anything next week. Okay, still seeing a little bit of fight in this zone. The volume is quite a bit sideways still in ZN. Did see the spread shift though, like the yield curve, especially in the 2s and 10s, steepened back out. Display that. So we've had some gentle flattening throughout all of this, but then since the top of the hour, steepening. Wow. So I didn't notice this. So we put this indicator on here to kind of watch it a bit, I guess. This imbalance. And it's curious to me how it kind of just, it comes up and then how consistent it's been through here. And it did almost get to 0.6 at one point. But the actual amount of imbalance is not that crazy, I guess. What about oil? They still falling? A little bit of a bounce, but they're pretty close to the lows. Hamas hints that the 6 hostages were killed because IDF forces got too close based on new protocol. I don't think that that's going to deter them. Maybe it could. I mean, it's a good gamble on their part, at least. Except for that, like, how many hostages do they have left, right? Hmm. Maybe getting a little bounce in Bitcoin? Tiny one, but yes. Maybe they'll settle at 114 even. I don't know. This, I tell you what, it's just like one of the wildest order flows we've ever seen. Does kind of feel like it's dying down now. Like that, there hasn't been there since that ISM number. It's a sell everything day. Well, everything but treasuries, sure. And Japanese yen. Well, let's see here. What's up? UB is up, obviously, 1%. But also wheat. Wheat and corn are also up this morning. Wheat, corn, soybeans. So agricultural commodities are up and treasuries are up, but then pretty much everything else is down. And who are the biggest losers? Oil at negative 3.98%. That's a monster move. And silver at negative 3.9%. here on a day when gold and silver were kind of looking okay at the beginning, and we're seeing some things that made us possibly bullish on gold. So I shouldn't have said anything early on in the stream. Not Jimmy. That's so funny. People still care. People, let's look that up. Let's look it up. Might as well. Let's see here. Here's GME. So there was like that huge spike, and all of the bag holders that bought from what's his bucket buying still hanging on. Still hanging on. But we're getting to that time. Oh, the 10th. The 10th. The 10th, there is a debate. But I guess the 10th, there's also GameStop earnings, and maybe they pump in front of it. Hey, you know what? That's actually not a bad idea. It's like, wait for the end of the day. Because like, look, it was up the past 2 days before that. It's down, but not like a ton. Maybe you get some more selling in GameStop. I don't know. Maybe you buy it like at the close today. And then they start pumping it for earnings. And then, like, if you're lucky, you don't even have to hold through to the earnings. You just take the profits, right? That's not a trade that I'm confident enough in to risk money on it. Maybe if I had more money to risk, maybe then I would, but an idea. Tech-savvy members of Gen Z can do anything on a computer except type, for the Wall Street Journal. was talking to my mom to try and help us find the freaking key. Okay. Fernando says my break even is 28. Oh, so you're long. You're long all the way back to 28. Well, that's not bad. I kind of feel like so like here again, that push through at 26 is like a pretty strong piece of volume. So I really don't think that you can go short after 26. Like, if you went short after 26, that was probably a little foolish. But I don't want to mess with it after it does something like that because that's too crazy. Still, if you wanted to take risks, you could be long from 26. That could have been an entry location. That would be pretty good. And honestly, most of this upside here is was just illiquid area. It's really, the high should really be 05 in my view, but whatever. Okay, so something that's been going on social media that I think is really funny is there was this person saying that like if you are weak, then everything that you see is viewed with the lens that like what does the group think, and you adjust to what the group is doing, and the only people that don't are autistic people and high status males, essentially. And then I think that the post kind of made this insinuation that maybe only high status males should be in charge or whatever. But Elon Musk retweeted it and said, interesting. And now everybody is saying Elon Musk suggests support for replacing democracy with government of high status males. So, like, they're completely misconstruing the retweeting the tweet and saying interesting. Well, I think the interesting part is the idea that only a very small segment of the population really truly looks at whether things are true or not, and the rest kind of try to adjust to the consensus. I don't think that that's actually true, but there probably is some effect to that, right? But I don't think he was implying that only high status males should make decisions, you know? This is a little silly. There's a little bit of a buy there, but cumulative delta in ZN is still pretty flat. It looks like it's done and is just sloshing around in this kind of skating around this area. We'll see. Maybe after we're done, we'll see another move up. That would not surprise me at all. Because one of those things is that I'll take a pause, like around the time that I would want to get involved, they take a pause, and then when I'm done, then they move it again. That's pretty common behavior. If Trump wasn't born into a family with wealth and connections, would he be where he is today on his own merits? So Donald Trump seems to be really good at taking large risks. Now, part of that probably comes from his upbringing and his family connections and everything. So I don't know if it would be a fair comparison, but let's say that he didn't have the wealth and connections, but he still got the same kind of upbringing. He was still the same kind of person. There's a good chance that he would still be doing that he would still do well. Maybe not as well as he has, but there's a good chance that he would still do well. But it's there's going to be a certain amount of chance to it, right? Hmm. Hmm. We're getting a little bit of uptrend, and then something kind of came in there and just cut it down. It still looks flat to me, though. Do you think a U.S. rate cut would be limited to 25 to 50 basis points this month. If the cut was upward of 100 basis points, what type of impact would a large move like that have on the market? Oh man. Yeah, well, so yeah, the chances of it being higher than a 50 basis point cut are practically nil. Frankly, I am still of the opinion that it's going to be a 25 basis point cut, but let's check that tomorrow and see what the outlays are. We've seen some economic data in the past month that still looks pretty good. And we've seen some economic data in the past month that suggests that we're just not coming back to 3% very quickly. Today, things look really recessionary, but, you know, that's kind of like a day-to-day thing. So currently, I feel that it's extremely likely that it will be a 25 basis point cut. If it was a larger cut than that, it would be a massive move. It would be a move on par with the moves that we had around COVID when the interest rates just skyrocketed up there and everything. You know, we would have to be in that kind of a situation again to have cuts larger than 50 basis points. There would really have to be, I think, a really major crisis going on. And frankly, at that point, it would probably be done in an emergency meeting and not waiting until the real meeting, you know, in that scenario. So if you want to know like what kind of an impact that would have, just go and look at the chart of the 10-year Treasury going into COVID, where, you know, they were kind of rising and they were on a good trend going up into March anyways. And then COVID hit and it was just like, boom, it was just insane. There was one night when we woke up the next day and it was just already up there, and holy crap, it was just crazy. And then that disrupted the market significantly. Like all of the liquidity in the Treasury market disappeared. Like nobody was trading it. It was crazy. In NinjaTrader 8, when connected to Jigsaw, it does not. So when, I guess the way I would say that is when Jigsaw is connected to NinjaTrader 8 with the bridge, does not show the actual price of the cryptocurrencies. Instead, it shows like 0.06 or 0.18 or 0.1. How do you solve this problem? Well, so I don't know which side you're looking at that on, but that would be kind of weird if when you only load it on the NinjaTrader site, it's okay, but then on the Jigsaw site, it's wrong. But probably you have an instrument setting wrong. So part of it is going to be, which cryptocurrencies are you talking about? Are you talking about the CME Bitcoin futures? If we go to BTC future, CME Bitcoin futures here in the instruments screen, so you go like tools, instruments, and edit this. And then there's this information like point value in particular. So if you don't have those correct, then the prices that you're going to get be weird and incorrect. So it's probably an instrument setting that needs to be changed. Probably. Go back and see how they lowered interest rates during the... I don't know what you mean by that. I think you're saying something completely different from what I was talking about, man. I have to go back to TradingView to look that far back, but you know, we're talking about this crazy thing right here. So like I said, going into it, so like January, February, there was a rise, right? And then all of a sudden, COVID became a serious thing and it just skyrocketed up there. Like truly just skyrocketed. It was already up. They were already on a pretty good uptrend. Because remember, this whole thing during 2019 was like during this period, for instance, was when it was like, hey, the Federal Reserve raised rates, I think it was, and the market didn't like that at all. And so then they had to go back and bring it back down at the next meeting almost immediately. Like, oops, we made it. So that was like the late 2018, early 2019 mistake. And then for the rest of 2019, we had, this kind of happened in little skips and jumps, but for the rest of that year, it was kind of moving up anyways. And some people thought were saying, this means a recession is coming. But then, we didn't really find out if that was really a good indicator of a recession or not, because we got a recession from COVID instead of some exogenous thing. And then you can see here where things like turned down really, really hard. Okay, so like they've turned down so hard, relatively speaking. So if the Federal Reserve was in an emergency situation where they were cutting interest rates like 1%, yeah, you would see a massive move. It would really disrupt markets. Now over here in 2020, there was all of this stuff. It was like, this is when they were doing emergency cuts and shutting everything down and all of those sorts of things. So there was more significant things happening under the surface than the chart might show you. But that was partly because like they had already like bought it TF out there. Like it was just already in zany territory. Okay, got 5 minutes left. I don't want to go over. Kind of been having a tendency to go over that 5 minutes. Which is okay, but I'd rather not. Does look to me, though, like that the market is kind of doing a double distribution day and is okay in here. U.S. manufacturing ISM signals accelerating stagflation as PMI turns downright apocalyptic. Ahead of Friday's payroll report, there were rising expectations that the economic rebound observed in the past 2 weeks and following the dismal July jobs report would persist. Alas, those hopes were promptly crushed moments ago when shortly after a dismal U.S. manufacturing PMI report, which printed in its final iteration at 47.9, below the preliminary print of 48 and below the 48.1 estimate. The more closely watched manufacturing ISM report came in even uglier, printing at the fifth consecutive contractionary level of 47.2, which, while a modest rebound from the 2024 low of 46.8 hit last month, missed estimates of 47.5. And while the two surveys have frequently diverged in the past, there's clear agreement between the two since the early summer. The U.S. manufacturing sector is imploding and the economic contraction is accelerating. The contraction was broad-based, with the index posting declines in the all-important new orders, production, and employment, while the employment sub-index did post a modest rebound while still stuck deep in contraction, which suggests that Friday's jobs report will come stronger than expected. The bad news is that the new orders declined at their fastest rate since June of 2023. And while most output sub-indexes remain deep in contraction territory, one continues to rise, the one that should not be doing that. We are talking, of course, about prices paid, which rose again from 52.9 to 54, beating the estimates of 54 and resuming its ascent since the start of 2023. In fact, compared to an 8-month lagging CPI print, one can be assured that we have seen the lowest CPI prints for this cycle. Adding insult to injury, the closely watched ISM new orders inventory ratio also suddenly plunged back to recession levels, signaling the manufacturing pipeline is now hopelessly clogged and mass layoffs are about to begin. While traditionally a 50 print in the ISM is a cutoff for the contraction, the highly politicized ISM report was quick to claim that the manufacturing PMI above 42.5% over a period of time generally indicates an expansion of the economy. Blah, 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 blah. Spoiler alert, it does not, but it is an election year, so anything goes. In any case, it's not even that the ISM was able to put much more lipstick on this peg and explain this as a contractionary expansionary print was hardly the stuff expansions are made of, with ISM chair Tim Fiore saying, past relationship between manufacturing PMI and the overall economy indicates that the August reading corresponds to a change of 1 to 3% in real gross domestic product on an annualized basis. Translation, we are this close to stall speed, and the survey respondents by large agree. I'm not going to read all the comments there. Bottom line, core outputs sinking as input costs and inflation expectations are once again surging, not exactly the data dependence the dovish Fed members are hoping to see, but at least the Fed chair will finally see that the stag and inflation he had so much trouble spotting just a few months ago. So I think that Zero Hedge is maybe blowing this report out of proportion. I don't think that the higher prices were like a huge deal. I don't think that the activity was like a huge deal, but it does awfully look like that the economy is kind of decelerating. I think that it probably just reinforces the Fed's view that they should cut rates here. I still don't think that the ISM news was the reason for the huge move that we saw in the Treasuries today. I also think that if we had a geopolitical risk headline or a bank going under, that we would have heard something by now. Could be the Japanese yen and the Fed speaker, oil cratering, kind of all combining together with us coming back from a holiday to create a big bender of the move. But let's put something in here. It's the largest volume event I've seen. I've seen in Treasuries. So I will leave you guys with that. Should be, I think, okay trading this week, and then we got the non-farms, and then next week and things should really pick up. So liquidity is definitely there. The market's recovering. It's going into more normal activity, so that's good. I will see you guys tomorrow. Stay excellent.